if the dollar loses its implied reserve status, what have I been saying? Triffin's dilemma, can't do it. Vance said it, the previous White House economic advisor, Jared Bernstein, Mr. Knucklehead, he said it in a report he wrote, Dethrone King Dollar. Lose the reserve status quietly, right? We're going to soft default on it. But if you are going to let this happen, Van Eck Fund says gold could go to 180,000 an ounce. That's their number, not mine. So let's just play this out. A $20 million bond you sell 20 years down the road, zero coupon. So you can bring back manufacturing at zero upfront borrowing costs. The rise of gold devalues the dollar. You can sell it to the world. Now, if today you had to pay on that bond $5,000 an ounce gold, that's 4,000 ounces of gold you would owe today. But what if Van Eck is right? And it did go to 180,000. Or we see a revaluation. Well, at 180,000, it's 110 ounces of gold instead of 4,000 ounces of gold. Right. So now at the end of the road, you have 110 ounces to pay. The dollar is devalued. You bring back manufacturing, and you sell it to the world. That is my thesis. That, I think, is what they're trying to do. Now, will it happen? Who knows? The world is very fluid. But to anyone who says gold will be revalued, there is a possibility that it could be synthetically revalued, where the president would just say to the Treasury Secretary, without congressional approval, you tell the head of the Federal Reserve to revalue gold. And they would. And that would inject tremendous amount of money into the Treasury, because every $4,000 increase in the price of gold gives the Treasury $1 trillion free and clear. They could do it synthetically by overtly saying it, or they do it by just anytime money moves synthetically, it suppresses the dollar and that interest is used to buy gold. Either way, you will see gold way higher. It is the only way out, because as my mentor, God rest his soul, Richard Russell, used to say, you can either inflate or die. Or, in this case, how do you produce he would say that because you couldn't produce your way out. We consume more than we produce. So how do we bring back that production? That's how you do it. And maybe Judy is right. And the fact that even though she didn't get elected or nominated, rather, the fact that she just sat down with percent gives me great hope that maybe indeed, and the amount of talk about July 4th all of a sudden makes me feel like maybe they are on this path. We'll see.
That would be cool.
Higher. Luke is right. Whether it is done just by revaluing it the way they've done it before, or letting it go up as a offshoot of the Genius Act, which I think they will do, or both. He's right. It will be higher.
All right. And just FYI, both Luke and Judy Shelton are going to be participating on the faculty for the Thoughtful Money Spring Conference that's coming up in, just a little less than a month from today. That's coming up fast. Also, Andy, you're going to be participating in that too. So, folks, that's just three of an amazing faculty that we put together for the event. Real quick question for you on Tether, Andy. So they create the stable coin. I get it if I'm sending you money, right? And the stable coin is the car that runs on the Bitcoin rails to instantly transfer that money over to you. But Tether is collecting the yield off that treasury, right? And they're making $1 gazillion on it, right? Which, as you said, they're now putting into gold. Why would the U.S. government let intermediaries like Tether do that? I mean, that's such a great position to be in. It's just a money minting machine there, right? So, A, do you have a thought on that?
Yep.
General question, but B, do you expect at some point the U.S. government to step in and say, we don't need an intermediary. We'll just have a U.S. stable coin, and the government holds on to that or whatever.
What is a U.S. stable coin called?
Sorry, what's a U.S. stable coin?
What would a U.S. government stable coin be called? It's called a central bank digital currency.
Yeah.
And what is the difference between a central bank digital currency and a stable coin? It's a ruse, if you will. Now, I interviewed Catherine Austin Fitts recently. It's got over 400,000 views in a short period of time. She's a smart lady. But she basically, my theory, it would be, and I'll tell you what she said, but my theory is that there's such a pushback against the CBDC, right? You don't want a central bank issuing the currency. That's you're in the digital surveillance state. Now, let's look at what did Trump do? And this is the one part about my interview with Catherine that got a lot of, whoa. I said, is Trump a good guy or a bad guy? He says he's not a good guy. She said he was brought in by This is what she said, that he was brought in by the powers that be to convince people on the right that they needed election integrity and a digital ID, because no one on the right would have ever stood for that, right? But we see what happened with the election integrity and all of this stuff of questioning the election. So the digital ID is the first step. You need it to vote, right? And that is the foray. And she said, if the CBDCs get so much backlash, what is a stable coin? A stable coin is issued by a private entity who makes all that money, but who controls the piping? They both come in and out right here to the Treasury Department. So if you don't think that the powers that be are monitoring the inflow and the outflow, I got a bridge to sell you. It's, in other words, what she would tell you is that a stablecoin issued by a company like Tether is a central bank digital currency in stablecoin clothing. It is the first step towards entry into the digital surveillance.
Right. I mean, is it the Trojan horse where it just drives adoption, it gets everybody using it,
Yes.
and then at some point the
That's
government
what she would
steps in
say.
and quote unquote
Yes.
nationalizes the stablecoin?
That's what she would say, something along. I'm having dinner with her next week. I'll find out for sure. But yes, that is the thesis, because, you know, everyone pushed back against that. This is private enterprise doing it, and of course, private enterprise would always have good intent. And so, you know, you go back and say, but weren't they in a lot of trouble for a while? Wasn't there all this talk about Tether hadn't been audited and questioned? And now Bo Hines, who was the crypto, now Bo Hines, who was the crypto czar until August, is the CEO of USA Tether, which is already Genius Act compliant. You know, I have always said there's a fine line between conspiracy and reality, Adam. And, you know, sometimes if certain people would watch these things, they'd say he's so full of crap. But a lot of the things that I've talked about that are fine line seem to just happen. It's weird. If you have the ability to just take a step back and see things for what they are, pull all of what we know out of it, and realize that at that level, misdirection is everywhere. I did speeches for years on the book, The Art of War, created in the 5th century by a Chinese military strategist, Sun Tzu. The whole object is how to beat your opponent without throwing a punch. But remember, this mandatory reading at West Point, at CIA. It's how do you beat your opponent without throwing a punch? And at that level, it's taught in most major business schools on corporate hierarchy. It's taught in law schools on formulating arguments. It's very pervasive. And in any game you've ever played, the object is to misdirect your opponents. Well, the same thing would be true in all of this stuff. At this level, you have to misdirect in order to get your stuff accomplished. And if you're very open and forthright about it, it's over. You can't be. And that's the part where your eyes lie to you, your gut doesn't. And it's tough to be able to let your gut overthrow what your eyes are telling you.
All right. Well, look, Andy, let me, if we can, let me switch.
Go rapid fire as fast. I'm good as you keep going.
Good. So folks, I was going to try to take questions from the audience here. I'm beginning to run up against my hard limit here. I've got another recording I got to do. But I want to get some very practical questions out of Andy if we can in the remaining time we have here. So, all right, Andy, so you've made a great, well, first off, just thanks so much again. It's always, it's so incredibly valuable to get to see through the eyes of a bullion dealer who's right there in the middle of the heartbeat of all that's going on here, right? You can't get that from some guy who just writes a newsletter. You can only get it from a guy whose hands are literally on the system right there. And you're so generous with it. So it's so appreciated. I've gotten some just practical questions since the last time you and I talked here. So I don't know if I can get through all of them, but let me get through a couple of them. When does it make sense if you're buying gold and silver? So let's say I'm watching Andy Schectman and saying, man, this guy has really convinced me. I need to start buying. I need to start owning more. Maybe I'm going to take Andy's advice, start buying every 2 weeks, which Andy, by the way, I do, and largely been doing that, inspired by your example to bump my, increase my purchasing up to every 2 weeks. But you know, if somebody's bought in, okay, this makes sense. I want to start doing it. When does it make sense to be buying, and we're talking ounces here, when does it make sense to be buying physical ounces inside of a taxable account versus inside of a tax advantaged account, you know, like a retirement account?
I mean, you could argue they're the same but different in the respect that inside of an IRA, it has to be held by a vault until you take distribution. I'll answer the second one first. The cool part about an IRA is the ability to distribute it in physical metal instead of cash. It's called an in-kind distribution.
Mm-hmm.
If you believe enough in the asset to own it in your IRA, the ability to possess it, which is a taxable event, is cool. Like you buy Exxon Mobil, they're not going to deliver barrels of oil to your driveway if you want, but this they would. You have $1 million in gold and silver held at a vault during, at any point. Now, if you do it before 59.5, you'll pay a 10% penalty plus regular income tax. You do it after, you won't. You just pay the tax, the income tax on your IRA. But bottom line is that the IRA is best for people who are a little bit older who may want to take possession in the metal once they start taking distributions, or maybe they just want to close out their IRA in a year. So fill it up with gold and silver and take possession of the metal instead of the cash. What you do in taxable, I think, that to me, that's money. The money that you own, you keep it in dollars, it's losing value at such a massive level. It's so fast, it's losing value. And I've shown this. You look at any asset, but real quick, in 2005, the price of a house was what? 240,000. Gold was 450. This is average. I've done this so many times I can do it quick. Mm-hmm. That you multiply that out. That house, if you would have used your 510 ounces of gold, you would have got it done, paid for. Now let's shove it under the mattress for 20 years and earn nothing. 26 years or 21 years and earn nothing but dust for 21 years. Well, what is the price of a house today? It's 500. Your house has doubled in dollar terms. Great investment. Way to go. But that 510 ounces of gold is worth $2.5 million. That buys you 5 houses. So in dollar terms, your house doubled. In gold terms, your house lost 500%. You buy 5 houses for the same price of the same amount of gold. So the point is, if you save in dollars, you're dead. So for me, when I buy gold and silver, it is not an investment. It is not to get wealthy. It is wealth. And it is wealth in the face of a dollar that is going to debase and devalue. And it has forever. It's just accelerating through monetary stupidity and irresponsibility, fiscal irresponsibility, monetary stupidity. But anyways, bottom line is, I think you buy your taxable stuff because it's wealth and it's because it's how you hold your money. If you're going to do it in the IRA, that's more of an investment with the intention of perhaps liquidating it and taking possession. You don't have to. You can go back into cash and buy NVIDIA stock or take a cash distribution. But it gives you options, and I like it for older folks who would be able to stand for delivery as a taxable event, knowing that they're going to start taking delivery pretty soon.
Okay. I'm going to ask you a bunch of rapid fire questions here, but I'm getting to a destination here. So, all right. So if I buy it in my taxable account, it's money. I'm essentially kind of being my own bank, right? I'm holding my wealth outside the banking system and something I have more faith in, right?
Yep.
If and when I go to sell it, that gets taxed at 28%, right?
Correct. Capital gains rate. Capital gains collectible rate.
Right.
By the way, same thing if you owned SLV or GLD, the paper proxy, which you can never take possession of. Go figure that one out. But yes, you're right.
Okay. But there are other ETFs you can buy where
SPROT ETFs, yes.
SPROT ETFs where you're actually not sub. You can pay long-term capital gains if you hold
closed-end fund, correct? Yes.
Yeah. Okay. So there's important things to know about that, right? But basically, under current rules, I'm going to get taxed at some rate. Right now, it's currently 28% when I go to convert this into something else.
Right.
If I own it in a traditional IRA, I don't pay tax until I'm still going to pay tax on it if I hold it till the end and then sell it to get cash as a distribution or take the metal at some point in the future as a distribution.
Your tax and income tax level is not capital gains because you've never paid taxes on that stuff.
Great point. Okay, so yeah, depending on what your tax rate's going to be.
One other thing real quick, if you take you'd liquidate and took it all, you'd be bumped up to the highest tax bracket depending. When you take distribution, it's income. So keep that in mind. If you're right on the edge of certain tax brackets, you want to figure that out. You take a big distribution, you could very well get bumped up into higher brackets.
Right. So it could be less advantageous for you than holding it in a taxable account tax-wise at the end, or more, depending upon what your tax rate is and how much you're
Or
taking
maybe
out.
you just figure possession is worth a lot more than the penalty for taxes, and that's an option too.
Right, right. And also, while you're holding it, and assuming you're doing it over years or decades, you have benefits of, you can trade in and out of it, right? You can switch between gold and silver depending upon the gold and silver ratio. You could switch it and own Nvidia for a couple of years and then move back to gold, and that's all not taxed. You're only taxed on what you're taking out in the end, right? So there are pros and cons to that strategy.
And for anyone who is thinking about doing IRA, I'd love to work with you. But before you do anything, please go to my YouTube channel, Miles Franklin Media, and watch the interview with Dale Whitaker, who was the former CFO for Augusta Precious Metals. He is a whistleblower. You must watch it, please, if you're going to do an IRA without my company. You want to do it with me, you don't have to worry about watching that, but go back and watch Dale Whitaker, please, I beg you.
Okay, I'm glad you mentioned that. And the reason why Andy's saying that, folks, is in a couple previous videos ago, we did talk a bit about the challenges of investing in precious metals through an IRA or through a retirement account. And there's a lot of basically bad actors out there. And Andy was explaining a lot of the tactics they use and a lot of things to look for. So if you didn't watch that video, go find the one that Andy's talking about with Dale Whitaker on his channel, because he gets really specific.
He pulls the blanket off or the Band-Aid off and goes right at it. And you should watch it if you're there.
Okay, so here's where I'm going with this. So if you, with a Roth IRA, I put my after-tax money in now. So I paid tax on this money, right? I now buy, I put it in a Roth IRA. Or just make sure of this, I can buy precious metals in a Roth IRA just like I can in a traditional IRA, right?
Yep, and your distributions are tax-free, that's right.
And then your distributions are tax-free. So here's where I'm going on this, which is like, it's hard to find if you're just planning on your metals collecting dust for a long period of time, right? That this is something that I'm holding as a long-term wealth preserver, and maybe there's some investment upside to it, TBD. Hard to find a vehicle better than a Roth IRA for this, right? Because you can put in metal today at $5,000 gold. If gold goes to 20,000 or the 180,000 that you're mentioning, you're pulling all that out in the future with no taxes on it, correct?
Correct.
And so here's just something to think. So A, that sounds really, really good. Now, obviously, there's only so much you can put in a Roth IRA every year. And at some point you can't put any in because you're making too much money.
But if you have a Roth IRA somewhere else, you can roll it into a precious metals IRA. If it's $10 million Roth that you have, you can roll it into precious metals from another custodian. But you're right, there are those restrictions about how much you can put in an existing one.
Okay, just making sure folks are aware. It's there's some things you need to know. But like if you've got young adults in your life, right, who are starting to work and starting to earn money, and you want to help them out by opening a Roth IRA for them and helping them put money into that Roth IRA. Well, if you're a big believer in precious metals and you can get them to understand what you're talking about, helping them at a young age put money into a Roth and then putting into precious metals and just telling them, look, don't touch this at least for 10, 20 years. You may be doing them a colossal favor at this point in time.
I've done that exact same thing with all three of my kids. One of them works for me, and the other two, I don't care if they come here during the summer and take out garbage and organize files and do whatever the hell they can in order to earn money, and they don't get any money. It just goes into their Roth every year. And they will thank me for that when they're, 60 years old. So
when they're our age, yeah.